Okay. So who doesn't understand anything so far? I've answered that when it comes to CPI, it helps us to measure inflation, help us to measure the well-being of household. In fact, if government wants to know whether the people are suffering or the people are actually having a good standard, we look at the CPI, Consumer Price Index. If it is very high, then we know that, okay, consumers are purchasing a lot of things. Okay, if it is low, we know that people are actually suffering. Okay, no question. Okay, so don't worry, those who are asking how GDP deflator comes to play a role, see where we get there. So I already told you, the guy who asked me, inflation rates. You could see inflation rates here. We all know inflation. That is one of the most popular models of macroeconomics. That if you want to measure the well-being of any country, you look at what inflation rate. So Ghana's inflation rate is around 29%. It means when you get money, show them, it will just vanish. You get it? And we use the CPI to measure inflation rates. How do we compute it? Okay, earlier somebody asked if we use 100. Yes, please, it's always multiplied by what? 100. Okay, good. So I hope my network doesn't interrupt this time too. Okay, so let's look at, we are making reference to what we did in the previous session, that the CPI or the inflation rate is computed using CPI. So you're going to look at what's the inflation rate. We want to compute inflation rate for a particular year. We want to compute inflation rate for a particular year. How do you compute it? Hello, can you all hear me?
Yeah,
Okay, let's continue.
yeah,
We
we
want
can
to
hear you.
okay, we want to compute the inflation rate for a particular year. We look out for current that very year. So if you're seeing CPI for year 2, talking about current year or the year that we are computing the inflation for, the CPI one here represent the previous year. Okay, so CPI year 2 represents good, the inflation rate that we want to calculate, 2022. So we want to calculate the inflation rate for 2022. We're looking at for the CPI for this particular year. We already have it. CPI for the previous year, all over CPI for the previous year times 100. So it's like current minus past, all over past times 100. Or you can put it this way, new CPI minus previous CPI all over previous CPI times 100. So you could see that what was the CPI for, okay, they said we should calculate the inflation rate for 2012. So let's go back to the table or what we did last time. Hey, you can't hear me. Ish. What you're saying, you can't hear me. Is it my network or is yours? They said we should calculate the inflation rate for what? 2012. So what was the CPI for 2012? 175, right? Now have a look here. The CPI for the previous year, the year before 2012 was 100. I don't know if you observed that one too. Let me go back. It was what? 100, right? Good. So if we want to compute the inflation rate, the 175 minus the previous year, which is what? 100, all over the previous year, which is 100 times 100. This 100 is just because this inflation rate will be expressed in percentages. Okay, so the current one minus the previous one all over the previous one times 100. We have these percentages. The same way the inflation rate for 2013, we look out for the current CPI, which is what? 250 minus the previous one or the old one, which is what? 175. This one all over 175 times 100, and we have this percentage. Who doesn't understand anything?
It's calculated for 2011.
Okay, 2011. Thank you very much. It's a very intelligent person. Now, 2011. Let's try to. Do you have any previous year?
No.
Good. You don't have any previous year. So try calculating. Let me see. Use this. That means you have to use the same year.
I don't understand.
Okay.
There will be no change because there's no change in price or there's no inflation.
Exactly. That's why I asked him to do it. So if we had used, let's say, 2012, like how you use, there's no previous year. Okay, there's no previous year. Yeah, somebody's hand is up. Please, if you text, yes, that's why I asked you to solve it. So get along. Don't you're asking me. Get along. Automatically start trying on your own. What previous year did you? There was no previous year. So make it the previous year is 0. Then you start computing all over the previous year, and everything will go to 0. Okay. So yes, Bell. Bell, I saw Bell's hand up first. Yes, Bell.
Okay, barrister, please, can they tell you that use 2013 as a base year and you find this one, the inflation for 2011?
Please, inflation rates, you don't have a base here. Okay, you look out for we look out for current year, you look out for the previous year. There's no base year here. I only
So then,
mentioned, come again.
can they tell you use this one, 2013 as your current year to find the inflation for 2011?
They are asking you to use 2012. Okay, that will be change. Okay, I get your question. I get your question. Yes, yes, yes. That means you have to go through 2012 first. Okay, before you can arrive here. The years follow in that order. So you can't come and pick 2011, 2013, and automatically go and pick 2012. The years should be in order. However, if the data given was, like that is an even number, let's say 2010, 2012, 2014. Okay. Recording in progress. Let me mute those who just joined. Anytime we want to calculate inflation rate, our focus are to the previous year and the current year. Okay, the previous year and the current year. Oh, they can't ask, it's not possible without a previous year. There should be previous year, or unless other circumstance where you'll be given other variables. I'm teaching you the linear way. There will be a circumstance like somebody asked me, GDP deflator. I've not mentioned a GDP deflator here, but there will be other certain circumstances where GDP deflator may be functioning as an inflation rate. And as you go forward, I will tell you the difference between GDP deflator and the inflation rate. Do you recall that when we want to compute GDP deflator, its computation is similar to when you want to compute CPI? Have you seen that? Because CPI to use the base year. Okay, good. Yes, that there are some distinctions. So I'll have to go along. I will teach you. Okay, who doesn't understand anything up to now? So the person who asks is not. Okay, please ask.
Okay, so the solution for the past there was a question where we're supposed to find the inflation rate between 2005 and 2010
Okay.
and calculator for the CPI. But when we're calculating for the inflation rate, they didn't multiply it by 100. So I was actually confused.
When they were calculating for the inflation rate, what variable did they give you? They gave this. They gave you the CPI.
It was, yes, CPI 2010 minus CPI in 2005 was CPI in 2005. It wasn't multiplied by the 100%.
It wasn't multiplied.
No,
Was it a question or it was a solution?
the solution.
Was it for me? Hello.
Hello.
I was asking, was it for me? Was it for my solution desk?
Yes.
And it wasn't multiplied by 100.
Nope.
Okay, thank you. I'll go and look at it. Please, it's multiplied by 100. Okay, inflation rate
Okay.
always multiply by 100. Okay,
Okay. Thank you.
welcome.
Please, back to 2011.
You have a question? Hello, Ishra, you were talking. Okay, let's continue. Please, without any question, we have to progress. Okay, time is on our side. Okay, so it's a similar thing that they are teaching us over here. It's nothing new. This is the price of pizza, the price of flats. You know whether some people will say late, but this is flats. So the price of flats, the price of pizza. Okay, and this is the quantity here. Okay, so you're saying 4 pizzas will be required and 4 lats will be 10 lats will be required. So the price of pizza at 2010, 2013 is $10 multiplied by the quantity here. You could see it. So 10 times 4 plus this 2 over here, $2 times 10. So you can see that our cost for 2013 was 60. As for this one, we've done it already. Okay, then somebody says it's a French word. Thank you for telling me I don't do French. So 2014 to please can we all compute the cost, because these are the costs involved, the cost to help us find the price index. Can we all do it? Who can do this thing? Or these things that they will come on. If it doesn't come in objectives, section B, you see it. Who can't compute this? So you just take the price, multiply by the quantity here, take this price, but make sure you don't interchange it. If you use the price of pizza, which is $12 to go multiply lats. If you use the price of pizza to go and multiply the quantity of lats, that means you arrive at the wrong answer. So when you're computing, please take note of that. You're telling us to compute CPI in each year. Very straightforward. Who can do this? It is a repetition of what we did in the earlier one. Please, who can't?
So the thing is, like, some of us just joined.
Some of you just joined. You just saw my message.
Yeah, so you understand, barrister. You know, so you just.
Okay. So what you're saying is that you want to compute CPI. Let me quickly, 1 minute. Okay. We use the price and the quantity.
Okay.
Yeah, sorry, I was locked out.
Okay.
I'm back. So if you join,
so you are saying we are to multiply something by the output.
Yes. So if you look at this example, so Khadija, which is Okasa. So you multiply the price. Look at it, son. I see the quantity of pizzas that was given was what, 4. The price of these are the price of pizza. So we are going to take at each year. Let's take 2010. 2013. Okay. So we are going to take 2013, the price of pizza, which is what, $10, how much was required? 4. So the 10 times what? 4. Because we are dealing with 2 products. If it were to be just 1 product, and we saying 10 times 4, you're going to get 40. But here we're dealing with 2 products. So we have to compute the other one too. Yes, what the lots. So we multiply the 2, turn to the price is what? $2. How much quantity was required? 10. So 2 times 10 will give us what? Will give us 2, 10, 20. Okay. When we are done, we add the 2. So 10 times 4, 40. 2 times 10, 60. So the cost of 2013 for this particular month is what? 60. You do the same for 2014 by multiplying the 11 by the 4 pieces, multiply 2.5 by what? 10 lots. 2015 to do the same thing, multiply the 12 by 4 pieces, multiply 3 by 10 lots. Okay, and when you're done, you add up. Now, after adding up, what you get here are your costs. What you get at the end are the costs, or we got to call the basket amount, the basket cost, or simply put, the cost in that year that you incurred. So the cost by Alexa Barrister in 2015 was what? $78. The cost in 2014 in purchasing these 2 products, my cost was what? 69. And my cost for 2013 was what? 60. You could see that the prices are what? Going up, because here the price was what? Rising. Out of this, we can compute our CPI and then get to what you call an inflation. So that was what we were dealing with. Okay. Please, I saw Eric, kindly mute your mic for us. Okay. I muted you, but I unmuted. Yes, I muted him. So please, any question? If you don't understand the previous video, I took my time to explain it very, very well. Okay. If you don't have my time, but I hope you all understand, because you don't have to join and waste your time too. Who doesn't understand? If you don't know how to compute this table, I hope you all know how to compute it. Alvin, can you do it? Solo? Arthur? Yes.
Marita,
Yes.
please, with the computing for the CPI, do we divide by the base year?
Oh, CPI. Yeah, CPI we look at for a base year. So here, what do you think
Okay.
was the base year? Here, the base year was what? 2013, right?
Oh, okay.
So you see that it was divided by 63 out. Yes.
Okay, so the base year throughout was 2013.
Yes, please.
Okay, thank you very much.
Welcome. Ken Sack. Am I a rapper now?
Barrister.
Yes.
Please,
Barrister.
in case you are
Yes.
finding from the
Okay, you can talk.
Okay, you let the other
Barrister.
person talk when he's done.
Yes. If you want to talk,
Barrister.
can you raise your hand so that I will know that you want to talk? Okay.
Okay, so then let me do that.
Okay.
Barrister.
Yes. Yes.
Barrister.
Yes.
Barrister.
Barrister.
Sack, kindly unmute and talk. Kindly unmute and ask a question. Yeah, that
Barrister.
Mohammed, yes. Yes, Ken Sack.
They are just mentioning your name. They don't have anything to say.
Barrister.
Yeah, bro.
Barrister.
Yeah, bro, massa.
Barrister.
Barrister.
Yes.
But when you put things in them, they do philosophy.
Barrister.
Please.
Take care of all this, barrister
Solo, your network is breaking and I barely hear you. If you could type in the chat box, I equally read the chat. Okay. So please let me continue from here. Kindly text in the chat box, okay, so that I could see your message. Else we won't progress. Ask him to compute it together with the base. Apart from the base, they won't ask you to compute it. Use the base here to compute it. And somebody was asking how we were able to compute the inflation rate. Please, we use the CPI. Okay. We use the CPI to compute the inflation rate. So we said if I want to compute the inflation rate for 2004, I look out for the CPI for the current year minus CPI for the previous year. Here, where the previous year is what? With 2003, divided by the previous year times what? Times 100. So here to be 115 minus this 100 all over 100 times what? 100. If I want to compute the inflation rate for 2005, I'll have to use this one, 130. So 130 minus 115 all over 115 times what? 100. So the current year minus the previous year all over the previous year times 100. As simple as that. Yes, Kensak, kindly unmute and ask a question. Please, one person at a time.
Barrister.
Yes.
In case you were giving, can you hear me?
Yeah, I can hear you.
Please, in case you were giving like a basket table from year 1, year 2, year 3, and at the same time they have give you the quantity times the price, how will you compute that?
They are going to, if they've given you you just multiply them like you've done here. Okay, you just multiply the price by the quantity. Just make sure you don't interchange one quantity for one price. So like here they multiply the price by the quantity. Here 10 times 4. That's what you're having here. Here 2 times what? 10. That's what you're having here. And they added them. Okay. Here to the same thing, 11 times 4, then 2.5 times 10. Very, very simple and very straightforward. Please, are we good? Okay. So this is an activity, very straightforward and very, very simple. They want us to do it, but I don't think we'll have to do it. Okay, it's very, very cheap and very straightforward. We've done it already. So smartly. Thank you. Want to snap? Okay, somebody wants to snap. Yeah, I even have somebody who is learning. It's not easy. So you have to be learning, okay? Some of you had Fs. It's not easy. The cons is not easy. There in I'm bleeding. I learn a lot. So you have to sit down and learn. Okay.
We are discouraging us.
Oh, I said 130 minus 115 all over the 115 times 100. Don't divide it like that, otherwise you get it wrong. Okay, somebody sent you a message 09. So it's 130 minus 130 minus 115 all over 115 times 100. I'm not discouraging, I'm just telling you the course no day grounds. Okay, if you compare other courses in under humanities to econs, realize that the other people, they actually, it's not stressful, that they are actually joking. But the cons is not easy, so embrace it and work hard. From the beginning of the semester, you just make sure you have a solid grounds to start. When you start very well, you solve questions. The cons is all, every exam on campus is all about past questions. Okay, solve past questions. That is why we are giving you the past. If you solve the past question, read a slide and watch even some tutorial videos like how I'm recording this and other YouTube videos. And you'll be good to go. 1100 there. If you don't get A or B plus, and you are getting E's and F's there. You are even scaring me. So most of you. So, let's let's continue. Agron Kwai. So you're giving us this table. You can go and you try this. I hope you all have this slide. I've shared it on the page several times. Solomon, your hand is still up.
Yes, please.
You have a question. Kindly ask your question.
Barrister.
Yes.
Yeah. My question is CPI good or something like that? If there is a high CPI, will it affect the economy?
Okay. A high CPI means consumers are able to buy a large number of quantities, okay, at a given price. So when you compute CPI and you're getting a higher value, so the consumers are able to consume or buy a lot of goods, or their prices, or let's say they're able to buy a lot of goods and services. Okay. Or in other sense, you can say that if you calculate the CPI and if the CPI is high, it means the price of goods and services are also high. You get it? So these are the two meanings you can give to it. Either the consumers are buying more because they have more money, or because the prices of goods and services are high. Okay.
So meaning that high CPI also indicates high inflation, like that.
If you compute the CPI will actually help us. The CPI will help us compute an inflation rate. Of course, if you're having a higher CPIs, you'll be expecting a higher inflation rate.
I just want to know if there is a higher CPI, meaning that there will also be a higher inflation rate.
Exactly. So let me
What you just said.
Yeah, let me give you an evidence from the slide. Okay, on the slide we just did.
Okay.
Take you back. Where did we compute? Okay. Okay. Let me use this one as an example. Okay. So find the difference between this and find the difference between this for me. If you look at this value here, we are getting 75, even though we have 250 over here. But it doesn't depict a higher CPI. If we have a higher CPI, but if you want to compare it to with reference to what's happened in 2012, you could see that this one is giving us a higher a higher inflation rate, as much as 75% with respect to 43%. Sometimes you can have a higher CPI, all right, but you may not have that kind of high inflation. Okay. These ones are trial questions that you can go and do. They are in the slide. I've shared a slide on all the platforms. If you don't have it, after the meeting, you can text them to me. And so what's in the basket? CPI's basket. When you say CPI, what constitutes CPI? Everything that you buy, water, food, anything that you buy. Ladies wear your, guys, our boxes, ladies, your undies and all that. Everything that you buy in this world constitutes the CPI. Yeah, somebody's hand was up. Paraquacy. Hello.
Yeah, hello, Barrister.
Yes, sir.
Yeah, I was asking if the high purchasing power,
Okay.
yeah, I'm saying if high purchasing power
Okay.
Yeah, if the nominal income and the CPI is high, does that mean that we have high purchasing power?
If nominal what?
Income.
Okay, it's high,
Income.
and if you're having a higher
And CPI,
CPI,
yeah.
doesn't mean the purchasing
Does that
power.
mean that
Okay,
it's
okay.
high?
Yes, I get it. So if you don't have much money, do you think you can buy a lot of stuffs? I'm asking you, if you don't have much money, do you think you can buy a lot of stuffs? People tend to buy things when they have enough money on them. So you're on campus, your whole money left on you is 100 Ghana cedis. Will you order for pizza or something?
So,
Of course, you have to go to the market to get gobe, a 3 cedis and cocoa 3 cedis, and you are fine for the day. Or you may play 1-1-0. But if you have money, of course, your purchasing power will be high. If your nominal income is high, why not? You can buy more goods and services.
So
Okay.
when CPI is high.
Hello.
Hello.
Yes.
Yeah.
If CPI
So
is
when
high,
CPI is high,
I explained using two sides. If CPI is high, it's either the price of goods are high, or like you said, the consumer is able to purchase more things. So it's either the quantity is a greater number or the price is a greater number. When you're talking about price, you're talking about the fact that the price of the good and service, the price of the good that you are buying. So if the price is high, of course, the CPI will be high. Now, if the quantity too is kind of big, or you're able to buy a large number of quantities, CPI also tends to be high. And if you don't have money, can you purchase more quantities? No. So it cuts in both ends. Okay. Okay.
okay, thank you.
You're welcome. So what constitutes the CPI? The CPI comprises of both goods that, like I told you, anything that you buy, even if you make call, is part of the CPI. Okay. The producer price index. What's the producer price index? Here they didn't give us how to calculate, because we are going to use the same approach to calculate for the producer price index. So the formula for consumer price index is the same thing when you want to compute producer price index. Are we good? Who doesn't understand any question, or who doesn't understand anything here, so that I'll go over for you. Now, if you want to measure, if the economy wants to measure a good standard of living, sometimes they don't look at consumer price index. They look at what you call the producer. And here they even stated in the slide that if you want to predict changes, you have to look at the producer price, because the producer may sometimes shift costs or shift what you call taxes or even prices to the consumers. I hope you all learned tax, incidence of tax last semester, where the consumer, the producer, they share taxes within some proportions, right? So sometimes if you want to measure a good standard or good price index, we look out for the producer price index. That will give us a good value of goods and services, or the exact price index in the market. So if you go into the exam, they ask which of these is the best measure of price index. Going for producer price index. Okay, it is actually the best way. It even said it here. The producer price index is believed to be helpful in predicting changes in the consumer price index. So if you want to know that consumer price index may change, the best option or the best way to go around it is to analyze what you call the producer price index. The formula for calculating price index is the same way for calculating producer price index, is the same way we want to go for, just like we did for the consumer. Any question? So I was saying that the producer price index is something, is the method of computing, okay, just like we have you buying things and consuming things, we also have producers, or we have other people who are called firms. They are not a household. They are called firms. What they do is that they also produce goods and services. They also have what we call cost. They incur cost, right? Good. So just like you buy goods and services, producers also buy capital. They hire labor and all that. You get it? So if you, and we are saying that because sometimes they push cost to us, or they push some incidents of tax, I mentioned it, most people tend to use the producer price index to estimate the change in the CPI. So if you really want to measure good inflation, you look out for the producer price index. Please, the meeting will end in 1 minute. We join again. But this time around, it's just 10 minutes. We won't keep long. Then we are done. Okay. So the videos to be uploaded on the YouTube, my YouTube channel. If you go and watch, subscribe.